All right. Morning, everyone. Let's get going. Sorry, wrong page there. Okay. Another sideways session out of the U.S. equity markets last night. Literally finished up 0.01% on the Nasdaq and down 0.01% on the S&P. I thought that's quite exciting. We also had a lot of data out yesterday. We're going to have a pretty data heavy week this week, I believe. We had flash PMI numbers for June that came out yesterday in the States, showing better than expected numbers. Obviously, manufacturing doing all right there. We also had home sales numbers that were better than expected yesterday. We just continue to see just a slew of better than expected earnings, better than expected market data coming out of the States, and I think that's really one of the reasons why it continues to propel us higher. We've got General Electric also last night that it sold off a little bit after acquisition of Alstom. That's the other thing that we continue to see. Almost on a daily basis, we're seeing news of an acquisition, and I mean that's just incredibly indicative of a bull market. It's just something that you always see at the real height of bullishness, and we're seeing it right now as much as it's been, I would say, all the way back to probably 2007. I don't think we've seen this kind of M&A since then. Looking at Asia, we're up mostly across the board. Really interesting this morning, and when I woke up at about 4 o'clock, I think most of the Asian markets were down, but the Australian market was up, and then as we go into the end of the session, the Australian market managed to turn negative, and all the ones in the red managed to go positive. So not really sure what that was all about, but we did have the Hang Seng that was kind of lifted by some of the Chinese banks, and we have some of the mining stocks that really started to drift a little bit lower in Australia later in the session. Yesterday, I found it interesting as well. I mean, even after the point that we had the morning call, we had a pretty steep sell-off in some of the Asian indexes, and for no real apparent reason, and then it's just this morning, just reverses to the upside. So it's I find that quite interesting how just random nature of that kind of action. I mean, yesterday the Hang Seng moved about 2%, if I'm not mistaken, in the last couple of hours. So that's I think important to keep an eye on those type of things. Right. Obviously, as we've been talking about before, markets have been incredibly boring as of late. The biggest reason for that is obviously because volumes continue to fall and volatility continues to fall, and you can see here volume in cash equities there in the U.S. you can see is in the dark blue. The average VIX level for the calendar month is there in the light blue, and we just continue to fall lower. It makes things, it's for the active trader a lot more difficult, and it makes things for everyone a lot more difficult. Just reduces opportunities across the board. The good news is that that's not going to last forever, and the complacency ends up getting guys in trouble and makes the volatility spike harder in those types of situations. So we're really at a point now where it's kind of sit and wait until the market really starts to open itself up to some decent opportunities again by giving us some volatility. All right, we had Omnia Holdings out this morning with headline earnings per share at 14.28. That's quite a lot lower than expectations. Divvy per share also quite a bit lower, so expect Omnia probably to be under a bit of pressure this morning. Later in the States, we've got Walgreens, but nothing really to pay attention to on earnings in the States. And market data out today, we've got late leading indicator numbers here on the open. We've got the IFO numbers across the board in Germany. We've got non-farm payrolls here locally. We've got house price index in the States. We've got consumer confidence. We've got the Richmond Fed, and we've got new home sales. So like I said, I think that this week is actually a data-heavy week, getting heavier as we get into the back end of the week. We'll continue to see how everything reacts to the data, but really hasn't seemed to be able to really drive any significant moves one way or another as of late. All right, let's get into the maps real quick. All right, we're going to keep it a little bit short this morning. First thing that we're going to have a look at is Kumba. Kumba yesterday came up to retest the the breakdown level here at 350. You can see there very clearly defined drop from support there at 350. We came back up, got above it briefly yesterday, or maybe for an hour or so. Couldn't really push away from it from the upside, and we kind of just failed it for the first attempt there at 350. I think it's important to note. It's going to be important to watch to see if this thing can get above 350 and hold above 350. If it does, then I think for the time being, it's kind of out of its really bearish setup. If it holds below 350 and continues to fail at 350, then I think it reiterates the fact that this thing is a sell. Right, let's look at ARIs. ARIs, you can see here, are pushing right up against trend resistance. It depends on if you want to draw this on the wick or not. Let's draw it on the wick just for the first look's sake. And you can see there, if we're drawing on the wicks, we literally closed right on resistance. If you're not a wick guy, then we broke out at 2 sessions ago. Either way, what I would look for here is I'd look for some sort of confirmation. If you're looking to have a nibble on the long side, I'd be looking for some sort of confirmation above the 193 level. As you can see there, that's definitely the level that we're going to need to get above to really give us confirmation. And if we get above 193, then we could probably get a nice little reversal out of ARI here. All right, Remgro. Remgro, we'll look at this on a 30-minute chart. And you can see here, we've really just been consolidating. The one thing about the stock, it's just incredibly wicky. But you can see there, we basically only narrowly, but I think still we did pop above what really has been resistance. We definitely did on a closing basis. You can see there hasn't been a close as high as that, and we've been in this little consolidation phase for a while, for a range only about $5. But we've popped up above that as of the close. If we can just maybe start to push away a touch away from this 225 level, then I think it should give us some confirmation to take us up to 230 in the next few sessions. Right, and then the last one that we'll have a look at is AIP. I'm struggling to find things at the moment, guys, so there's not a whole hell of a lot moving. AIP, you can see there really drop below support here on a closing basis. We definitely made a new closing low for the last year. I think that we probably need to see some confirmation here and get below the actual lows, which you can see here on the wicks are really right here. Let's just have a look. Call it 53.40. If we can below that number and we can actually hold below that number, I'd like to see a close below that number. Then I don't see any reason why this thing can't continue to reverse and can't continue to sell off below that. And the downside target there would be very significant, as much as 10 Rand on that continuation pattern. So keep that in mind. That could be a much lower target for AIP if we can drop below that 53.40 level. And that's it for today, guys. Thanks a lot.